Hello, good afternoon. You've tuned in to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as well. And like you can see at the bottom of your screens, you do have some updates coming in from Interglobe Aviation as well. So that is what we're keeping an eye out on. And this is what sources are saying. Night duty definition is rolled back. DGCA has granted Indigo one-time temporary exemption from key phase 2 FDTL rules that were there. This rollback is going to be from midnight to 6 a.m. and to midnight to 5 a.m. for the companies. So we'll watch out for more details on this one. Indigo must present a roadmap for full compliance also for the next 30 days as well. And this is something that is for Indigo's A320 fleets. This is the latest update that we have coming in, where DGC had said that they have granted Indigo a one-time temporary exemption for key phase 2 FDTL rules. Night duty definition rolled back from midnight to 6 a.m. and to midnight to 5 a.m. for Indigo A320 fleet. So important update that's coming in there, because in the last few days you've clearly seen a lot of chaos going at the airports, even with the stock, right? You've seen a sharp fall coming in as well. Now look at the stock. Let's see a recovery, and now it's a bit down, but yes, significantly recovered from the day's lowest point. That's Interglobe Aviation, and this is according to sources that we are highlighting for you all as well. So keep an eye out on Interglobe Aviation for sure. But also let's keep an eye out on the markets today, right? Second day that we're seeing some bit of a gain and more gaining a momentum today in terms of the gaining side that we're seeing coming in. Nifty is holding on to gains of 0.5%, almost near the day's highest point. So no complaining on that front. You have IT that's doing well. You have banks that's managing to hold on to gains. So Nifty IT, 1% almost gain that we're seeing coming in there for the Nifty IT. Apart from that, the broader end of the market, Nifty mid-cap managing to hold on to some bit of a gain today, 0.4%, but small cap, let's pull that up. Nifty small cap is not doing well, right? 5-6% of decline that we're seeing coming in for the Nifty small cap. And that is why, look at the advanced decline ratio, right? Despite the Nifty doing well, the advanced decline ratio obviously is in the favor of declines versus advances today. Almost 1,400 approximately, 1,600 stocks approximately on the decline side versus a 1,198 stocks on the advances that we're seeing coming in. But yes, that's how the market setup is looking like. PSU banks and IT doing well in today's trading session. So that's what we'll be keeping an eye out on. But let's get started with the show, which is where we solve all your stock related queries, right? And to do just that, today we have our independent market expert Shahina Mukadam as well as Ashish Kyal of Wave Strategy Advisors to answer all those stock related queries. Let's move on and talk about the first query for today that is coming on Ramakrishna Forgings. We have K. Srinivasan, who's writing to us from Chennai. He is holding 125 shares of Ramakrishna Forgings at a price of 834 rupees per share, making a loss on this one right now, considerable loss, because the stock is trading at 529. Wants to know the future prospects of the stock. Shahina, Ashish, good afternoon. Let me start with you for this one, Shahina. Ramakrishna Forgings, what should the viewer do?
I would say after this big correction, it is better to continue to hold at current levels. The second quarter was very bad in terms of numbers, overall numbers. So to that extent, the stock has corrected. But if you see, they have got very good, clients. Most of the OEMs are their clients, and I think on the second half, OEMs are likely to do better. Volume numbers are picking up. And also, there is one factor where the promoters have actually subscribed to warrants just recently, and the price that they subscribed to was at 588 rupees per share. So I would say that this is a good bottom to hold it at, and the money that is raised will go in for actually putting in for some bit of expansion and growth. So I would say hold at current levels.
Current levels, that's the word on the fundamentals. On the technicals, Ashish, Ramakrishna Forgings, what should the viewer do? Can they even look to add some more or average some more at these levels? What's your view?
Afternoon, Vinny, and all the viewers. See, if you look at Ramakrishna Forgings, yes, the stock has corrected. But before I move on, just as a disclosure, we do have holdings on the stock, and we are positive. We have a positive coverage. We can expect the stock, after forming a good base, it looks like forming a falling wedge, which is a bullish pattern on a breakout. And it has been consolidating for quite some time. Since September onward, it's moving in a very broad range. And I'm expecting that the stock should give a positive breakout. above 550 levels, there can be a very strong move back towards that 650 or 700. My recommendation would be you can average at the current levels and keep nibbling the stock as overall the outlook is positive. And on the downside, the support for the stock is around 500 levels.
Okay, surely we'll be keeping an eye out on those levels over there. Let's move on to the next query for today. We have Prem, who's writing to us from Mumbai, holding 500 shares of Sarda Energy. Price is 609 rupees, and he's holding it since September 2025. But since then, seems like there's a decline, and he's making a loss. Now, wants to know, should he hold it for 6 more months or exit the stock? Shahina?
I would say that he should continue to hold it. These are they are into metals and mining, and they are actually doing pretty well if you see their numbers. And going forward, also, if you see, the prices are for aluminum for their ferroalloys ore and for the ferroalloys products, the prices are moving up. We've seen it, manganese ferro alloys, the average realizations have been moving up in the last 6 months after that big fall that we had seen last year. So at current levels, I think it makes sense to hold. Valuation wise, also it is not expensive, and the balance sheet seems to be fully funded to meet any expansions that they may have. So at current levels, I would say it is a hold.
Okay, hold for Sarda Energy at current levels. Your view on this one, Ashish? What should the viewer do? Should they hold for 6 more months? Could it recover to their buy price?
Yes, possibly, because see, Sada Energy had a very good consolidation zone between the levels of around 480, 470, and on the downside support at around 400. It has arrived now back toward that price action support area. So there is a possibility we can start seeing some kind of a base formation and a reversal back on the upside. So continue to hold on to the stock here with a support, very important support around 430. And on the upside, once the reversal happens, we can expect it to move towards 550 levels.
Okay, keeping an eye out on that over there for Sarda Energy. Next query for today. This is an investment query for today. This is Navendu, who's writing to us from Ahmedabad. He's asking if he can buy transformers and rectifiers at the current levels, and says he's a mid to long-term investor. Shahina, what's your view? Transformers and rectifiers, would that be something that you would be looking at in the capital goods space, or are there other stocks in terms of valuation? What are you keeping an eye out on?
The transformers, I would not be investing at current, as of now. There are a couple of issues over here. One is actually pure numbers. If you saw second quarter was disappointing. So we don't have that support with us. Secondly, there is some question that the World Bank has raised regarding the integrity of the promoters. Now, while it is a very small percentage, there's just about a 200 crore order in Africa, but that it's a small percentage of the overall order book, which is close to 6,000 crores, and largely it is domestic order book. So it's not really going to have an impact. But the World Bank has raised issues, and they have got, I think, another month, mid-Jan, they have to submit their reply. Let us see what the reply is. Let us see, the next 1 or 2 quarter numbers, and then you could look to invest. I would not invest as of now.
Okay, and your view on this one, Ashish? Transformers and rectifiers at current levels, should the viewer look to invest or wait out for some bit of a time?
No, my suggestion would be to be out of the stock, because the stock has been falling since quite some time and there is no sign of recovery. We can see a steep decline. It's best to be out of the stock, and it has broken below the support levels also. So rather than this, it's better to invest into different stocks. Something like a KEC International is a much better choice than transformers and rectifiers.
Okay, surely we'll keep an eye on that. KEC is a better choice than transformer and rectifiers. That's a word from Ashish over there. We have one more update that's come in. Indigo has indicated that the crew recruitment will occur in the coming days. So that is what, and this will be to achieve the compliance with the required standard that is there. Let's keep an eye out on this one as well. This is more updates that's coming in there. And obviously, the DGCA, like I mentioned before as well, has said that, they've granted Indigo a one-time temporary exemption from key phase 2 FDTL rules. And obviously, this is for the night definition, which is there and changes over there. So that is some clarification come in there. We'll keep an eye out on Indigo through the day as well. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be solving more of your stock-related queries after the break. Welcome back to your stocks on CNBC TV18. We still have with us Shahina Mukadam as well as Ashish Kyal to answer all those stock-related queries. Let's keep it going then. We have Kalyan Babu who's writing to us from Hyderabad. He's holding 11,000 shares of Urban Company. This is at a price of 173 rupees per share. And 8,900 shares of Sula Vineyard also at a price of 264 rupees per share. He's asking if we should average both these stocks. Your view on this one, Shahina?
I don't suggest he averages either of the two as of now. Urban, see, I would say Urban Company, the valuations are expensive, very expensive, very strong platform company. But even if you forget about the profits, but even if you look at it in terms of the turnover and compare it to the EV, it's still expensive. It's about 9 times. So it's going to be a couple of quarters before we start seeing the valuation actually start looking attractive. But it is one IPO which is still above its IPO price in the recent past. But at the same time, the investor has gotten at a high price. If he's holding it for the long term, he can continue to hold and average it at, next 2-3 quarters down the line, maybe a year down the line, and then hold it for the long term. As far as Sula Wine goes, the numbers have been very disappointing. Increased competition, higher raw material costs actually have put up pressure both on their revenues as well as on the EBITDA. Now, the positive that could come over there is they are talking actually to diversify, add other products to their wines, which actually seeing the competition. Now, they are talking of doing acquisitions to expand their product portfolio. So I would wait and see what is the implications, what products they acquire, what brands, what is the implication on the balance sheet, and then I could look to add, if at all. But if you want to be in the space, I think why not go in for something like a Radico Khaitan, which has everything in place, likely to do very well over the next 2 years. So I would say just switch.
Okay, that's a word coming there on the fundamentals. On the technicals, Ashish, Sula Vineyards, Urban Company, I know not much in terms of charts, but they want to know whether averaging is an option that is suitable for them right now.
If you look at Sula Vineyards, we can clearly see the stock has been correcting from the levels of 700 now at around 222. My suggestion would be always have some kind of a stop loss or risk management system in place. Otherwise, you will keep seeing the capital eroding every single day. So if you look at this stock, my suggestion would be to completely avoid. There is absolutely since past many weeks also the stock was at 250, now at 222, and there is no sign of recovery. So exit from here. And then there is no pattern which is suggesting that it's going to recover back on the upside. As far as Urban Company is concerned, again, very similar kind of a story where we can see the stock has, post the listing, the stock has corrected very sharply. And there is no sign of recovery even on the stock on the upside. So my suggestion would be to exit from Urban Company also. If you want to enter into the new age companies, maybe something like a Nykaa or something like a PTM should be much better than staying with these kind of stocks.
Okay, let's move on then to the next query. For today, we have Madhukar, who's writing to us from Hyderabad, holding 100 shares of HPL Engineering, and price is 1,020 is what they bought it at. Stock is at 108 currently. He wants to know if he should average or book his losses. For HBL Engineering, what's your view, Shahina?
I wouldn't suggest averaging, but these railway stocks, which are getting orders from railways and their whole performance execution depends on railways. The performance has been very 1 quarter up and 1 quarter down. The first quarter was very disappointing. Second quarter was excellent. Like electronics, which actually contributes now almost about 60% of their revenues, grew in multiple times. I think 7 or 8 times multiples, and you saw the effect on their profitability also. Now, if you look at if you put all that into perspective and take an average for the first half, I would say that if you're holding for the long term, it is a decent stock. If you're looking at valuation in terms of the order book is about 1 times their revenues. So and other valuation parameters also, it is not too expensive. So if you're holding for the long term, yes, but it is not going to give you that quarter by quarter performance. So you have to take that in stride and keep a long term view.
Okay, long-term view. Keep a long-term view, then it's fine for HBL engineering. But Ashish, your view on the technicals, averaging option, book losses, what is your suggestion?
My suggestion would be do not average it now because the stock declined very sharply from 1040 towards 809. Looks like a third wave down, which is very sharp and violent. There is not even a single close above prior day's high since about 10-15 days. So do not average it out. There is an important support which is around 760 levels. My suggestion would be keep that as a stop loss as of now. And over the near term, maybe if you get a pullback towards 880, be out of the stock because it's only going to give a temporary pullback and then it's again going to go down.
Okay, let's move on to the next query then, and that is Tony, who's writing to us from New Delhi. He is holding 60 shares of Titagarh Rail Systems. Price is 1,225 rupees per share. He's making a loss on this one. Long-term story for this one. Shahina?
Well, this is a similar story. Any company which is, getting orders from railways and depends on them is going to see, fluctuating sort of performance. It's a small cap with market cap just below 11,000 crores. Here also, I would say, if you're keeping a long-term investment horizon, then you can continue to hold. Because if you see also in terms of capitalization, the promoters here also had issued warrants to themselves in the last year of about at a price of about 945. So it gives you some bit of a support over there. Order book is very strong, 30,000 crores. So you have things in place. Execution is a problem, and getting if they can get that in place in the longer term, yes, it will be a good stock. But otherwise, you have to have a long-term holding for these type of stocks.
Okay. Ashish, a quick view on the technicals for this one?
See, the stock has corrected below its 52, 20, and 200 days average trading there. My suggestion would be hold for now, but be cautious about it. Maintain 750 as stop loss, possibly pull back towards 900. Use that as an opportunity to be out.
Okay, thank you so much for that view there, Ashish as well as Shahina. Thank you so much for joining us in the show and hope you all have a great weekend. But with that, we're absolutely out of time on this edition of Your Stocks. 26,160 is what the Nifty is managing to hold on to. Keep an eye out on that, but don't go anywhere. Up next is Closing Bell to take you through all the market actions in the last 1 hour of trade.